Hey everyone, Catch 'em All Collectibles here. In today's video, I have a little bit of a PowerPoint, but I kind of did it in Excel, so we're going to go through that. I am going to talk about reseller taxes. Reseller taxes for dummies, not in a derogatory way. I'm not calling you all dummies. I'm trying to simplify the process. It probably won't be a 10-minute video. It might be stretched out a little bit, but we'll see what we can do. If you didn't watch my last video, I would recommend you go watch that. I talked about the 3 things you need to do yesterday to get your Pokemon business up and running the right way. The longer you go without doing that, the more difficult everything I show you in this video will be. Separating your accounts, legitimizing, becoming a business, and don't fear fees or taxes. And in this video, within this video, you will learn a method how I save over $10,000 per year. I'm doing the same business, the same way that I was years ago. I'm just defining it and structuring my business in a different way. Call it a loophole, call it whatever you want. I don't make the rules, I just play by them. And I keep professionals in my corner to help guide me through what is our mess of a tax code. This video will be very US specific. I live in New York, in the United States. These will apply mostly to US people, primarily. To some extent, I'm nowhere near experienced or understanding of any of the international tax codes or anything like that. So very US specific with a slant towards New York, but there will be some, to some extent, it applies to businesses everywhere in some regard, I'm sure. I will talk about how I max out tax buckets, and I will talk about the importance of that, why I do that, and the efficiencies that you get. There will be too. Throughout this video, if you want further elaboration on any point, if you don't understand something, I answer all my comments. If you're enjoying the video, feel free to like and subscribe. I never say that in my videos. Yeah, feel free to leave suggestions for future videos. I can dive deeper into something, and I will talk about the difference between cash and accrual accounting. And not only did I do the video last Monday, I also did a live. I did a live stream for 3 hours the other night. I wouldn't recommend you go watch that whole thing unless you're really deep into this stuff, deep into the Dan content. It was a fun live stream, one of my favorites, but it was definitely fairly lengthy. This will be just a more succinct version of that, maybe a little less ranty too. But anyways, let's start. I told you last week that I would show you how to do your taxes as a reseller. I sell on eBay. Whether you sell on eBay, whether you sell on Shopify, whether you sell on whatever platform you sell on, they will have some way to pull out a CSV. And this will be eBay centric, but if you sell on eBay, and yes, I know I'm showing my numbers. I've shown these numbers before. I did 1.35 million in sales on eBay in 2023 per my performance tab under the sales. Very important. I did not use this information. This is not the information the IRS gets. Go under the payments tab and go to taxes and get what's called a 1099 reconciliation form. So I don't want to use, and you'll see, I'm not going to go through all this because I've already done it, but that is where you get it. It's under the payments tab, taxes, and then it will be called like a 1099K details form, 1099K reconciliation form. So as you can see right here, 1.35 million. As you can see right here, 1.298 million. Depending on the year, depending on how things go, depending on the timing, because you probably can't read it on your screen, but as this says, these are for all transactions settled within the calendar year of 2023. So if a credit card purchase happens and the payment, for whatever reason, sometimes credit cards, there's a charge date and there's the settlement date that's sometimes 2 or 3 days later. I think what happened is I had a couple very large sales right near the start or the end of the year, and combined with some other complexities. But the big thing, the moral, the takeaway, the IRS gets this number. There is a government document, and actually I have that right here with my information redacted, I hope. Yes, so I do have my TIN. I redacted eBay's TIN. I don't think they would care, but 1.298 million. This is a government document that was mailed to the IRS. So I don't want to start off on the wrong foot talking about 1.35 million. And maybe there would be a certain year where that would be 1.25 million. In this instance, if I was over reporting my income, the IRS might be like, well, what's this guy doing just volunteering to pay more in taxes? But anyways, always ensure that you're using the 1099K reconciliation, because that's the number that the IRS gets, and that's the more relevant number. That's when the government has a document that they're going to be starting from, that's where you want to start from too. And one thing to note, one thing of big importance, so column O, when you download that form, this is just a summation. This was not here by itself. I have a note right here to pull out the refunds. This is total gross receipts. Total gross receipts for all transactions settled during 2023. You need to pull out refunds. Throughout this, I will show the form 1040 Schedule C. I will show you and talk about what deductions you can take as a business, what goes into your cost of goods sold, what can be written off as a business expense, office expenses, business use of home, all that kind of stuff. You need to deduct all that stuff out so that you're not paying taxes on $1.3 million, because $1.3 million in sales, and then if you sell on any other platforms too, like eBay is just obviously one place that I sell. I made a list here. This is not an exhaustive list for me even. This is just an idea maybe to jog your mind. Pull this ESV from your 1099K details reconciliation. Pull your bank statement. Ideally, if you watched my video last Monday and you followed it, hopefully, I mean, it's messy if not, because what you have to do is you have to go out and you have to pull out your groceries. You have to go and you have to pull out when you buy things that were non-related to the business. You need to only expense business transactions. So when you have a separate credit card for those business transactions, when you have a separate bank account and everything in that bank account, basically the only things that go into my bank account are deposits from eBay, deposits from PayPal, sometimes deposits from Wise, Shopify. Everything in is income to my business, and everything out, I mean, I pay for 99% of things with credit card. Some amount of, I do some amount of like private ACH wire payments. So those would come out of my bank account through Wise. But what you have to do is essentially, and I wrote right here, like double entry accounting. So every time, and this might get a little deep here, I hope I don't scare too many people away, but it, as a former chemical engineer, it's basically just doing a balance around your money. And it's very simple. The more streamlined you have everything, it sounds like a lot, but it's really not that bad. Every time you have a charge on your credit card, your balance sheet, I mean, there's a debit where you have a negative balance going on your credit card that you have to pay later, but your inventory goes up by that amount, right? If I buy $1,000 card, it's $1,000 debit, but it's $1,000 credit into my assets category. So being an S corporation, I actually have to maintain a balance sheet. I have to report that to the IRS every year. Most people watching this video, most people in the Pokemon space, it will not be appropriate or reasonable or optimal for them to become an S corporation, but we will go through in a few minutes here how and why that might be the case, why an S corp might be best for you. And yeah, we'll kind of talk about like from each of these statements, like everything on your credit card, it should all be business, and it's just about classifying. Like say you have, well actually let's go to the next tab because I think I have so right here we have sole proprietor versus S corporation. So here are one theoretical situation where one business A, business B, they both do the same things. They both make the same sales. They both do the same everything throughout the year. One of them, or they both on paper, once everything is done, once they filled out their whole 1040, they both make $160,200. Why did I pick that specific number? Because that is what the FICA limit is. Federal, I forget exactly what FICA stands for, but basically it's Social Security and Medicare. There are two portions to FICA taxes. There are the employer and the employee portion. When you are a W-2 employee at your company, you pay half and your employer pays half. When you're self-employed, you pay all of it. This is an oversimplification. Certain things like QBID, qualified business income deductions are not included here. So this is not exact. That's why I have the little tilde here next to savings, approximate savings. But yeah, in this scenario, and this could be its own video. If I do a finance channel someday, it would probably be its own video. When you are an S corporation, you have to pay yourself on payroll, and that payroll is subject to FICA taxes. As a sole proprietor, and there's further complexities here if you're a side hustler. If you're a side hustler and you earn W-2 income, and then this is just like side income, there's the FICA limit of 160,200. Well, some amount of your day job goes into that, right? So if you're already capped out on your FICA taxes, this is less applicable to you. Really getting deep in that, not going to be a situation that comes up for everybody. I mean, $160,200. I don't know what % of Americans make that much or make more than that, but it's not a massive amount. I'm sure that the majority of people watching this don't make that much money. But yeah, again, in the sole proprietor situation, all that money flows through to the income portion, to the income portion of that individual, and they have to pay FICA taxes of 15.3% approximately, I believe it is. Yeah, 15.3% on 160,000. I mean, quick math, $24,500. So $24,500 you have to pay, and being an S corporation, you have to pay yourself a reasonable salary. This is not the salary I pay myself. This is just a random number. I wanted a nice, clean $100,000 number down here for income subject to the tax, but not the payroll taxes. So here, the full amount of net profit is subject to FICA taxes. Here, only $60,200 is. Reasonable salaries are based on what your duties are as an employee of your business. They're based on where you live, your cost of living. If you're living and working out of Chicago, New York City, Los Angeles, a big city like that, your reasonable salary probably has to be higher to justify due to the cost of living where you're at. Living in the woods has its advantages where I can justify legally, because mathematically, the lower this payroll is, the lower that I pay myself as an S corporation, the less money I pay in payroll taxes. So say I had a way to justify paying myself only $20,200. So instead of having a $15,300 savings, now my saving would be 21 grand. But can you actually justify it? If you're working 2,000 hours a year trying to justify, that's a full-time job, 40 hours a week times 50 weeks. If you're working 2,000 hours a year and trying to justify paying yourself $10 an hour for running a Pokemon business and doing everything, that would be a pretty big stretch. I would think that would be a very aggressive stance by you and your CPA to come up with that. But 60,000. I mean, if you're doing it full time, that's $30 an hour. Maybe that's more reasonable for where you live, what you're doing. Maybe you're only working 20 hours though. Maybe you're only working 20 hours a week. Maybe you're only part time, so you could get away with 20,000, and that would be $20 an hour. It all comes down to your circumstance. That's a conversation you have with your accountant on setting what your reasonable payroll is. But yeah, it drastically minimizes your FICA taxes. This is not what your total tax obligation would be on that amount of profit. This is just the FICA. So once the FICA taxes, once the payroll is done, everything else flows through to your income the same way, and you would pay the same federal and state regardless of S Corp or sole proprietor. So the full savings of the S corporation comes in through the saving on the FICA taxes. If you're in a situation where you have to pay yourself $160,200 a year, and that's like, or if you're in a situation where, if you're either in a situation where you have to pay yourself the full amount you're earning, there's no savings with an S corporation. And if you're in a situation where, I guess the same thing, but the other way, you only make, actually that's not the one I can edit. You only make $60,200. There's no savings. You need to, when does it start making sense? It's kind of like a delta between the, it's a delta between the net profit and what the payroll, what you're paying yourself. So if you get to a point where you're earning multiple tens of thousands of dollars more than what you would have to pay yourself as a payroll, it might start making sense. Mind you, I did have to pay several $100s to become an S corporation. Mind you, there are additional hundreds of dollars a year that I have to pay to upkeep and maintain that S corporation, quarterly filings, and the corporate deadline just passed recently, March 15th that was. So yeah, that's a pretty deep thing there on sole proprietor versus S corporation. That's how I save myself more than $10,000 a year. One simple thing. And in 2020, I was not, like, I made well over $160,000, $160,200. And back then the FICA limit was a little bit lower, but each year since 2020, I have made decently in excess of the FICA limit. In 2020, I was not structured properly. I cost myself over $10,000. Business, all else equal, I cost myself over 10 grand by not being an S corporation. Fully legal, not like, call it a loophole, call it whatever you want, just playing by the rules. but doing it optimally and not paying any excess taxes. This is what tax avoidance is. This is not tax evasion. This is just tax avoidance. Another thing that I wanted to cover, another very big thing, accrual versus cash basis. So again, here are two identical businesses. Here are two identical businesses, A and B. They both have, and I gave examples to make sure that people could do like a sanity check and make sure the math made sense. Both these businesses have $200,000 in sales. To make it very simple, very easy. In a year, they sell 200 items at $1,000 each. Very, very simple, very, very easy. Their total spend is $200,000. So they bought and they sold $200,000 each. But let's say, since they're making money on every item, they're a very good business. They make 100% margin on everything they buy. They bought 400 items at $500 each. So all items they bought, I mean, it would be a beautiful thing if business was this easy. If every card graded a 10, every card was just like nice, clean, double up. It's never that easy. There's always some items you win on, some items you lose on. But in any case, furthering down, just a random starting inventory. So this is if you're accrual basis, it matters. Rows 5 and 6 are not even applicable if you're cash basis. You don't have to monitor. You don't have to keep track of inventory. Be careful. Consult a professional, consult a CPA. If you do keep records on an inventory, if you do certain things in your books, in records with your business, you might actually disqualify yourself from being able to file as a cash basis filer. So talk to your accountant, talk about the 2019 Tax Cuts and Jobs Act. You might be doing things in your books and records that disqualify you from filing as a cash basis. So be very careful on all that. Consult with somebody. That's getting a little bit deeper than this video can go, but maybe I can talk about that more in a different video if people want to know. Let me know in the comments below. So in this instance, accrual profit, they made $100,000 because even though they spent and received in the same amount of money, their inventory grew because they only sold 200 items. They bought 400. They grew their inventory by 200 items that had a cost basis of $500 each. They grew their inventory by $100,000. The key difference between accrual and cash basis is that accrual, you don't write something off until you sell it. Cash basis, you write it off when you buy it. And this is where the I mentioned the Pokieni video that he made, getting kind of chastised in the comments over something that he was correct on. If you want to take an extreme scenario, and say that on December 30th, this business had sold 200 at 1K each, and it had only bought 200 at 500 each. So the cash basis filer at this point, say they had only spent $100,000. So on December 30th, they had only bought 200 items so far. On December 30th, if the year were to end then, they would have $100,000 of profit to pay taxes on. But being a cash basis filer, on December 31st, they go out and they make a big purchase. They go out and they buy 200 additional items at $500 each. The same widget that they're buying and turning into a $1,000 widget to sell for double. They spend $100,000 that as of yesterday, as of December 30th, they were profitable by $100,000. Well, now they've spent it all on December 31st. Now when taxes come around, they do not owe money on that. So you can actually, I say at the bottom with triple asterisk, because you need to be very careful. Choose your income. I mean, with cash basis, you can literally control your spending to an extent. I mean, you can control your sales too. Even with accrual, you can, I mean, almost like in stocks, almost like in cryptocurrency, you can do some tax loss harvesting. Say you have a very expensive item that you've actually like lost money on. Through an accrual basis, you can like sell some items and realize a loss at the end of the year that would drastically lower your ending inventory value, and that would allow you to they would allow you to get like a benefit, get a benefit into the next year due to that inventory end value going down a bunch and due to your accrual profit showing a lot less. So there are ways. With cash basis, it's a lot more straightforward. You don't have to worry about the cost basis of the individual item. Avoidance optimized, not just made up. Like, I'm not saying choose your income as like write whatever number on the line that you want to. I'm not saying that. I'm saying that you can toy around with your spend at the end of the year, and most cash basis filers do to some extent, because one thing that cash basis filing allows you to do, it allows you to retain profits in your business. And the reason that the IRS, like someone might ask, why would the IRS even allow this? A business that is essentially made, for all intents and purposes, they've made $100,000 because they've grown their inventory by $100,000 worth of product. And they haven't sold that yet. So theoretically, like, they should have to pay tax on that, right? The reason the IRS allows this to happen is because they'll get it down in the future. They allow you to retain profits in your business. They allow you to grow your business. And the decrease in complexity, not having to maintain your inventory. Because one of the most common questions that I get, how do you do your inventory, Dan? Do you have a million row Excel sheet that tracks every card that comes out of every box you open? Do you break out every collection? You buy a collection of 1,000 cards for $10,000. Do you call every card in that collection $10 cost basis? Or if there was one card that was worth $9,000 and then the other 999 cards were worth about $1,000, how do you, like, I don't get that deep into it, to be honest. A lot of it's like the big things I track individually. So maybe 50 cards I track individually, the very high end stuff. Probably not even 50, but the boxes, the ultra modern boxes that I buy at $92 a piece through my distributor. Well, I have 100 cases. Well, that's quick math right there. So the big things are tracked. A lot of the smaller things are just estimated. So that's the answer to that one. We're going to have a lot of topics, a lot of things going on here. And one thing, choosing your income, that can be massive. So we do have, and I covered this a little bit in the live stream. Well, a fair bit in the live stream. We do have what's called a marginal tax rate. So say you make that same $160,200 from the other sheet over there. Your first $13,850 if you're a single filer. Your first $27,700, that's exempted from taxes essentially. If you're not itemizing, if you're taking the standard deduction, that first $27,700, there's no taxes on it. There's zero taxes on it because your AGI is just taken down by that number. To allow you to make, I mean, a married filing joint household can make $27,700 and have no tax obligation. If they have kids, they can have credits. They can even have less tax obligation than that. But after your itemized deductions, after your standard deduction, your next 22 grand you pay 10% on. Your next this is additive too, so it's not it's not additive. There's not an additional $89,450 that goes in here. There's just $77,450, and then so on and so on. This is a little over $100,000, So yeah, but each additional amount. One thing that commonly is discussed, people I used to work with. Oh well, I make 40 grand a year now. If I get a raise to 50 grand, I'll actually make less money because I'll go up to the 22% tax bracket and all my money, all my 50 grand will be taxed at 22%. That's not how it works. You'll still be exempted on this. Your first 11,000 after your deduction will go at 10%. Your next and your next. Only your raise amount, only that small additional amount will be subject to the higher amount, except one big exception that could be massive. As I always say, like, personal finance is very personal. We are all in the same arena, but we are playing by different rules. Person A, business A, is playing by a very different set of rules as person B. They're playing the same game. They're playing in the same arena. Very different rules if you're accrual or cash. If you are a household, if you are a family, if you're an individual, say you're a sole proprietor, whatever you are, if you are utilizing like the Affordable Care Act, if you have healthcare through one of the exchanges, there are certain subsidy cliffs. There are massive subsidy cliffs. This could be its own video, more fit for the personal finance channel, but it is very relevant if you do not have the sugar mama situation. I'm going to do a sugar mama video one of these days. I promise there will be a sugar mama video talking about all the benefits of that and stuff. But there are people in situations where if they make an additional, as I just said, if you make an additional 10,000, only that additional amount that goes up into the next bracket will be taxed at the next bracket. But there are individuals, there are households where making an extra $10,000 will cost them $10,000. Like, there are actually subsidy cliffs. There are times where making an additional $5,000 might cost someone $10,000. Like, you might lose money by making more. As crazy as that sounds, that's the exception. That is not the rule. But you need to know, like, no one will do this for you. Maybe if you have a good accountant, they might pay attention to that for you. But as I said during the live stream, you are the only one that will have you yourself as number one. You are the only one that will have, like, have your best interest in mind. So you need to keep an eye on all this. Like you might fall into one of those fringe cases, one of those exceptions where you need to really, and being a cash basis filer, you opting to buy another $10,000 worth of inventory on December 31st might save you many thousands of dollars. Like, you need to be fully aware of all this. It's a lot, but it's manageable. It's manageable, and if we put as much time into tax optimization as we do following all the latest drama, all the latest PokeTube drama and real life drama, like all the TV shows we watch, all the times we waste time, there's so much room for optimization in taxes, and I'm all about it, clearly. What else did I want to cover here? So I think I meant to show it a little bit earlier, but I want to show where things go on the 1040. I was supposed to do this a little bit ago, but this is the actual Form 1040 Schedule C through right through the IRS website. Google 2023 Schedule C Form 1040. This is what you would do as a sole proprietor. As an LLC, it might be a slightly different form, but it would be fairly similar. It might be the same exact form for an LLC. I'm an S corporation, so I believe the form that I use, my business uses, my CPAs use for me, is 1120S. It's a slightly different form, but a lot of the same thing comes up. If you're on mobile, it's going to be very hard to see. I apologize for that, but I guess I can zoom in a little bit. But right in here, so gross receipts or sales. What my number from the 1099K was, that 1.298 million, that goes here. You might only have eBay. Or like me, you might have TCG Player, Shopify, PWCC, Heritage, Gold, and some of those, be careful, some of those don't even give you 1099s. Another place that you have to put here, gross receipts or sales. I put in a large amount of sales that I get no 1099 for whatsoever. The reason that I put them in is because I legally have to, and the way that I track them is by going back to where I was earlier, doing just a mass balance on my my bank statement, a mass balance around my accounts, and I see exactly where, and that 1.298 million, that's not the amount that flows into my bank account. What flows into my bank account is that minus eBay fees, that minus my store subscription fee, my final value fees, all the shipping fees I pay through eBay. So you need to go in and you need to pluck out, because it would be great. And honestly, cash basis filing, you get a little bit closer to this. It would be great if you could just say, here was my January 1st, here was my bank account. And then December 31st at 11:59 p.m., here's what my bank account was. Here's the delta in my bank account. I'll just pay taxes on that. That's functionally what cash basis filing is, but you still need to pluck things out and put them in the right spot. So whether you're paying your shipping fees, whether you're paying your final value fees, it gets a little different. I have multiple credit cards too, which further complicates a little bit of it. Some things I pay with checks, some things I pay with credit cards, some things I pay with ACH. There's a lot there, but once you start working your way through it, it all comes together. And one thing that's great, once you do it the first time, use that as a template. Every time a new year comes, I start with last year's, and I basically, all the formulas are still there. All the formulas that are summing the right things, and all the VLOOKUP tables, all the things that I've done, which some of them are overkill, some of them are just sanity checks, some of them are verifying that everything balances, kind of that double entry accounting that I was talking about. There are programs that do all this too. There are programs that you can use where you upload your CSVs, and they do their best, but a lot of those, they need to be massaged into working properly. So unless you, I played that clip last year on my, I'll try to remember to link the tax advice video. I talked on all this fairly briefly, but that was probably a half an hour video too. This one's probably going to be 45 minutes. I think some people have the expectation that you just download the CSV, you send it to your accountant, and then you're done. Maybe some people download all their CSVs from all their accounts and then send that to their accountant. That would be bookkeeping, not just accounting. That would be actually doing the bookkeeping. Significantly more expensive, I'd imagine. And it might lead to some amount of errors, because if you make a cash, not only non-1099 gross receipts, but there are certain there are certain expenses that I have. There are certain expenses that I have that do not show up on my credit cards. There are certain ones you need to keep records when you go to a Collecticon. If you're buying anything for cash, keep records of those dates and those amounts and those transactions. You need to be able to, if you're ever audited, you need to be able to justify like, oh, well, we see that you had 1.2 million in expenses that flowed through your both your credit cards and your bank account and your wire transactions, but you're claiming another $50,000 in cash purchases. What are those and where are those? And yeah, you need to have records and all that in case an audit ever comes, and where those would go. And this is where if your cash basis inventory at beginning of year, that's not relevant. Inventory at end of year is not relevant. All your purchases would flow through materials and supplies. And a lot of this, like, if you look at this closely, like here's materials and supplies on line 38 that goes into your cost of goods sold. Some people ask me, grading fees, where do they go? When I buy my bubble mailers, where do those go? Because you could make a reasonable argument that I mean, you could put these into your office expense. Maybe that's actually business use of home, so maybe that's not the right one. But you could argue that these go into there's something that it could fit. Basically, what it comes down to, there's multiple places that certain things could fit, like advertising. There's just certain things where there's like overlap. I tell my accountant exactly what these things are. I actually have like an organizer that they give me, and they determine. But functionally, if you put up a number into 36, 38, these things in here, whether you put them in there, whether you put them in 18, 19, mathematically, they all factor out the same way in determining what your net income was. So get a system down between you and your accountant, or if you're doing it yourself, which I don't do it myself, get a system down where eBay fees, PSA fees, like just be consistent. Don't be putting them in different spots, different years. Be consistent where they go. Have a reasonable argument as to why they go there. I mean, don't put like PSA grading fees in advertising. That's not advertising clearly. But is that, yeah. Some people too, like when you do accrual basis filing, well, if you're doing accrual basis filing, you account for the grading fee separately. I write off all the grading fees within the year. So I do those as like improvements to my inventory, essentially. I maintain a record and I maintain track on what my inventory cost basis is of the raw items, or if they're already graded, of the graded item. And all the grading fees are taken like the year that I do it. I don't track, well, I graded 5,000 cards this year, 3,000 of which were sold, so I can write off those ones, but I can't write off the other 2,000. Those get added to my inventory. I just expense those in the year that I take them. All these were conversations between me and my accountant. Your accountant might do something differently. But yeah, I did want to show the 1099, and I wanted to show a little bit how and where these things flow. And one thing that's great about this, it kind of jogs your idea. It jogs your idea of like, what can I actually expense? What can I write off? Advertising. Are you paying for Instagram, Google ads? Are you paying an Instagram advertising service to shout out your listings or to pump your listings, whatever? Car and truck expenses. Are you going simplified? Are you going actual expenses? Do you have a 100% business vehicle, or do you have a personal vehicle that you use for that? One great thing about running a business for yourself is that in like a W-2 9-to-5 type business, type job, not business. In a 9-to-5 type job, your commute is not expensible. Your commute cannot be written off. As a chemical engineer, I had a car and I had to drive 20 minutes each way, and that was all just cost of being an employee. Now that I'm full-time self-employed, my business is my business owns a vehicle that is 100% business. All the mileage, all the repairs, all the gas, everything for that vehicle goes into this part 2, line 9. All my vehicle expenses. It was a large purchase. I didn't take any debt for it. I just bought it. Those need to be amortized over multiple years. If it weighs over a certain amount of money, you can do it all in 1 year. Again, getting very deep. There could be a 10-minute video on how to write off a car and how to do it simplified versus the regular way. Commissions and fees, eBay fees, selling fees, platform fees, whether you put them there or whether you put them on a separate line, just be consistent. But yeah, fees, I mean, that would reasonably be like your Troll and Toad Evo fees, your eBay fees, your Shopify fees, things of that nature. Contract labor. Do you have streamers? Do you have streamers that you pay on a 1099? Are you properly classifying your 1099 independent contractors versus W-2 employees? That could be its own video. You need to be very careful. Someday, I've said many times, I'm the fisherman here. I am aware of the word enough. I'm conscious of the word enough. And when I do in the future my Catch 'em All Collectibles household budget video, I will talk about those concepts, how they tie to my business and all that stuff. But I never envisioned myself having a W-2. Certain things about the way that I'm structured as a business, being an S corporation, my wife is actually, my children will be employed. I didn't get into that in this video, but my children will be subject to the same exemptions that I get. They are able to take They are able to take the standard deduction. They are able to take a standard deduction of up to somewhere a little over $10,000. It might be slightly different for a minor, but basically, once my kids, as long as they're materially participating in the business, I can pay them. And well under 14 years old, like normally in New York, you have to be 14 to get your working papers to be able to work. But employing your own household members, employing your own family, very, very different things. And the tax benefits of paying a child that gets to write off the full amount under their standard deduction and pay no payroll taxes. They are fully exempt. They are fully exempt from FICA taxes. So instead of my business profiting an additional maybe $5,000, let's say, and paying FICA taxes on that, and paying my marginal rate for federal, paying my marginal rate for state, then funding my child's 529 account for like college or whatever, I could just fund a Roth IRA with the full $5,000. So the cost of funding $5,000 into a 529 might cost me like $8,000. Like I might have to earn $8,000 of income to flow flow $5,000 through to my kid's 529 after all the taxes, because it's only state tax exempt, which is much smaller rate than federal. Whereas with having them on payroll and paying into a Roth IRA, it cost me $5,000. It cost me pre-tax. No taxes being paid on that. It's a beautiful thing. Further than that, employee benefit programs, insurance, like a lot of that comes down to those are all zero lines for me, because I don't have employees, and it's all familial only, and we get health insurance through the sugar mamas plan, interest, mortgage, things like that. If you're doing simplified office use, business use of home, versus if you're doing like actual expenses, say you have a 2,000 square foot house and 500 square feet of that is solely for business. So I believe the way it works is if you have inventory stored somewhere that's kind of like shared mixed use, you can still write off that. But if you have like an office space, say you have a computer set up, a desk inside of an office, if you use that for your 9 to 5 and for your business, you cannot write that off. It needs to be 100% business use, with the exception of like where you store inventory. A lot of complexities here within all these lines, but they get simplified when someone else walks you through all these. I learned all these things. I learned a lot of these things paying an accountant, paying someone $200 an hour to talk me through how it all works. So renting, leasing, repairs and maintenance, supplies that could be like pens and pencils, Sharpies, and labels for your label printer, ink for your inkjet printer, or laser printer, toner for your laser printer. So many things here. Taxes and licenses, travel and meals. When you go to a Collecticon, when you go to a convention, your flights, your hotels. Meals are usually limited to about 50%. I think you can write off unless they're custom. Certain things about meals. Some of them can be 100%. Some of them can only be 50%. Deductible meals. There's like a separate instruction for what meals are deductible and what are not. Utilities. Cell phone plans, internet plans, what amount of your household's internet, what amount of your cell phone, maybe if your spouse is involved in your business, if your children get involved in your business, if they get cell phones, like what portion of those, what percentage of those are business use and can be written off. That covers most of it. I mean, that's kind of anything bought with intent to resell obviously goes into your cost of goods sold. It goes into your line 36 purchases. Less cost of items withdrawn for personal use. One thing I constantly say is inventory is much more tax efficient than personal collection. Anything you buy, personal collection, you have to pay sales tax if it's not intended for resale. You cannot write it off if it's intended for personal consumption. The way that I operate, the way that I always have, I'm not keeping any of this stuff forever. I have a limited amount of childhood stuff that I'm keeping forever, that my mom bought. I have no cost basis on that tied into my business. I get gifts occasionally, and I don't sell gifts. So those don't show up anywhere in my taxes. My PC is very, very limited. But I have some inventory that is intended to be held for fairly long, whether I'm investing in it, speculating in it, whatever you want to call it. It's not personal collection. It will be resold at some point. I'm not taking, unless I go way too tragically young, which I hope I don't. I'm not taking any of this stuff to the grave, ideally. Not much of it, at least. So be very careful. If you are PCing a lot of this stuff, if you're PCing it, you need to withdraw it for personal use. You need to pay sales tax on it, and you do not get any write-offs for that. That is a separate thing. It's not just like that's where you get into evasion. We're not talking about evasion today. We're talking about avoidance, tax avoidance, not evasion. Materials and supplies. That's where whether grading fees go in there, whether they go above all your shipping stuff, anything you need to do, necessary, ordinary, and necessary for the business, gets written off. And a write-off, say you write off $10,000 worth of stuff, that stuff isn't free. One common misconception, one common thing, people say like, oh, it's a write-off, as if it's just free now, as if your write-off, what it functionally does is it saves you your marginal rate. Like say I have a $10,000 write-off, instead of paying $2,200 in taxes on that, if I'm in this bracket, I'm not paying that $2,200 in taxes anymore, right? So a $10,000 write-off, in some ways you can argue like it only costs you $7,800, right? Because you're not paying the taxes on it. But let me see if I had anything else. I do have like a closing. Not this. This was a slideshow. This is much more of a much more of a spreadsheet that I somehow used as a PowerPoint. But yeah, let me get back over here. Let me see if I had anything else to cover. So closing tips. Trust but verify. As crazy as it sounds, and when you work with a CPA, when you work with an accounting firm that's going to file your taxes, usually you have to sign some kind of an engagement letter with them. I believe mine is like a 6-page engagement letter. A lot of legalese. It's like covering themselves. At the end of the day, you have to sign before they e-file your return. You are responsible. So ignorance is not an excuse, and you cannot just say like, oh, it's their fault, they did it wrong. Ultimately, the IRS will hold you responsible for any errors in your whole return. So I say it all the time, you need to consult professionals, but further, you need to consult competent professionals. I went through a whole segment in my live stream about like, how do you determine a competent professional? Google reviews, word of mouth, talk to other business owners that you know, hopefully try to find someone good. But yeah, review the terms of your engagement letter, know exactly what you're paying them to do and what they're not being paid to do. A lot of this stuff, like all the documents that I showed you initially, all the summaries that I pull, I'm pulling all these. It's not like they just magically get those. I'm pulling all those, and I'm only sending them the numbers that go into the forms. I'm not sending them. I'm not opening the closet of my keepers like in Dodgeball there, that clip that I showed last year. I'm not sending them raw CSVs. I'm taking the numbers and I'm whittling it down to like what they actually need, what's relevant, and I'm portioning off of the $1 million that flow through my credit card. I'm saying like $800,000 was inventory and $100,000 was grading fees, and these are made up numbers, but I'm portioning them out. And $50,000 was shipping, and $10,000 was shipping supplies, and on and on and on. You end up doing a lot of the work yourself, and then you pay them a decent amount of money to verify all of it. You're kind of verifying each other as you go. But yeah, trust but verify. Make sure you get somebody that's going to fight for you, someone that's going to be in your corner. Ensure you follow. As I said earlier at one point, you can't just be cash basis filing and do whatever you want. If you are maintaining certain records in certain ways, there are very specific instructions. Shout out Not Your Dad CPA. He's made a couple of videos on this. But there are people Guaranteed, there are people in this space. Well, one, there are people just evading all their taxes and not doing any of this. But there are people that are doing cash basis filing, but they are maintaining their books and records for their business. They have spreadsheets in their business, maybe that they're even giving to their accountant, that would preclude them from being able to file as a cash basis filer. So talk to your accountant about that. Be careful. Maintain your books and records in the way, because if the IRS ever audited you and you provided them with a document that shows an inventory value for your inventory, they would say, boom, right there. We're going back. We're collecting back penalties, back taxes, all that stuff, because you were classifying as cash basis when you have to classify as accrual basis due to X, Y, and Z. So if you ever end up in an audit, don't provide them with something that is going to write your own arrest warrant. Not really arrest warrant, but write your own guilty verdict. So yeah, be aware of what you're doing, what you're not doing, what you can do, what you can't do. I just had thought of another point I was going to make there with that. Oh yeah, another thing that comes up from time to time in audits is what I talked about earlier, S Corp, reasonable salary. You need to have justification. You need to have almost like a work description. Like, I am the president of Catch 'em All Collectibles Incorporated. I have like what you'd find at a company. I have a brief little document that just says approximately this many hours a week. These are the roles. This is the title. These are the things that I do. And then I came up with, due to where I live, how many hours I work, what my roles are. I ran it by my accountant, and we determined what a reasonable salary would be. And I forgot to actually cover this portion, but one thing that's great about being a sole proprietor and having, and you can do this as a sole proprietor, as an S corporation. I believe as a sole proprietor, it would be called a SEP IRA, self-employed. So I forget what SEP stands for, but self-employed something, SEP. SEP or SEPP. SEPP might be something else, substantially equal periodic payments. That's a different thing for a different video, maybe on the finance channel. But anyways, a big thing that I do, and a big reason that I chose accrual basis, part of the reason I chose accrual basis over cash basis is because I started this business in 2014, pre-Tax Cuts and Jobs Act, pre all those rules being a thing. But I like the insight that it gives me into how much money I'm actually making. I like the insight that it gives me into what my inventory is valued at. I like the money extraction that it gives me. It allows me to extract money from the corporation and max out my IRAs, max out my 401ks. So you cannot put money into an IRA that was not earned income. You have to have, same thing as a child. A child cannot be on the payroll without having earned income. A child cannot fund a Roth IRA without having earned income. But with my salary is not $60,200, but I'll tell you, it's not that far off. I chose random numbers here. My real numbers would be fairly close on that, and my real number would be a lot higher on that. Pokemon's treating me very well right now. How long that will last, who knows? But I max out all my accounts. I not only do I do the limit on that, I mean, my wife is employed by the company as well. My children will be employed by the company as well. My wife travels to conventions with me, and she materially participates in the business. And she has her own reasonable salary that has been determined. My children will have their own reasonable salaries determined by what they do. But I'm fully maxing that out. I'm able to additionally up to 25% of what my income is. So 22,500 is not that's my contribution limit, but then the employer, who's also me, can put an additional 25% in. So say theoretically, I was paying myself exactly the 60,200, I could put in approximately additional $15,050 would be exactly 25%. So I would be able to put in $15,050 more than the 22,500. And then Roth, if you want to go Roth versus traditional, if you want to go backdoor Roth, mega backdoor Roth, so many further strategies and things there. But yeah, that covers all that. One thing I wanted to cover, I think I covered everything there. Let me make sure I covered everything there. I think I did. The S Corp thing. being able to max out all the retirement accounts. Yeah, so the reason I want to be accrual, what a lot of people do in this space, maybe they have a sugar mama, maybe they have a 9 to 5 and they're just a side hustler. A lot of people like being cash basis filing because they don't want to pay taxes on anything. They don't want to pay taxes on anything. They want to be able to get that number at the end of the year down to zero. They spend to zero every year so that they can retain all their earnings and they can grow. One thing that I do actually, because I have the sugar mama and she pays most of the bills, on paper, I do pay myself this much money. And through that, I pay all these FICA taxes. But one thing I don't do, one thing you don't have to do, this money in this amount does not have to functionally travel from my business account to my bank account. So if you're a sole proprietor, if you're an LLC, they're all called different things, but there's like an owner's draw, there's a cash distribution. I can take cash distributions in excess of what I pay myself. I can take no cash distributions. As long as I'm paying myself a reasonable salary on paper, as long as all the FICA is going through, as long as all the proper taxes are being paid. Once the payroll's done, I still owe $100,000. In this scenario, on my marginal tax rates, I can lower that through the standard deduction. I can lower that through funding 401ks and IRAs. But ultimately, I want to take money out of cardboard and put it into traditional investments. The reason that I like being accrual is because it allows me to do that in a very tax efficient way. I am maxing out all the accounts. I'm doing all that good stuff. We're going to be going on an hour here. But yeah, that's why I chose accrual. A lot of people, I think the way that a lot of people operate, I can't say most, but probably most, they want to spend more to zero. They don't want to show much. They don't want to take much out. They want to, if you get to a point where on the latter half, like I'm in the latter half, I'm trying to go FI, I'm trying to do all that stuff. I want to take a lot of money out. The percentage of my net worth that is in Pokemon is like, that is in cardboard. It's business inventory. I'm making good money on it, but it's uncomfortable. I want to get the traditional side of that a lot higher. So accrual helps me do that more. This is a little bit of a rant that I wanted to put on here at the end. The lost art of Googling stuff. Like, do not put all the responsibility on me on this video. Do not put all the responsibility on your accountant even. Do not put all the responsibility on the random TikTok video you watched. I don't know what it is these days. The amount of power we have in our pockets, the amount of like information we have access to, and it just feels like people don't use it. I don't know if it's them not knowing how to use it. I fear that it is largely like people not knowing how to find information. Go to primary. Do you remember? Like, I am going on 34 very soon. Back when I was in school, I couldn't quote Wikipedia. I had to have the works cited. There was another term for it, right? The bibliography. I had to go. Shout out to easybib.com. I used to love that for doing all my works cited, my bibliography. But I had to quote primary sources. The IRS.gov, New York.gov, those are primary sources. Go and get your information from there. I know it's a lot of words, and the amount of words, the amount of doom scrolling that you do on Instagram and YouTube Shorts and TikToks, you can put a little bit of time into tax planning. You can put a little bit of time into tax optimization. If you're 53 minutes into this video, you are disproportionately someone who might do that already to an extent. But please, if you put 53 minutes into this, go look at some of the primary sources. I pulled some up during this video. Go look at some yourself and go verify, like do a sanity check on everything that you're doing is making sense. It blows my mind how many people will spend more time. It's like they'll just post it on a forum, in a Discord, in an Instagram chat, in a YouTube comment, like, and I'm not saying like don't ask me questions. Please ask me questions. I will find the primary source. I will answer it. But like, a lot of people will just take what people say on the internet as ultimate fact. And when the information is right there, the primary source is right there, like, please use that some. Please use that some. There's that rant over. All income on a 1099 W-2. So all income, whether or not it is on a 1099 or W-2, it is still reportable. As I said earlier, you take in cash, you take in Venmo, you take PayPal friends and family. If you sell through me, if you sell through my consignment service below, I mean, reach out if you want to sell. I will not 1099 you. no document goes to the government. But when I pay you through ACH, when I pay you by a check and it goes in your bank account, there are evidences of that money being there existing. Like, I'm not telling you what to do, but I'm telling you what you legally have to do. Legally, you have to report that. So tax advice number 1, pay your taxes. This is one that came up during the live. If you do a trade, I think a lot of people like the idea of trades because they think that there's no tax obligation. Here's a primary source. I will show you. Trades are taxable as 2 simultaneous sales. So say I have a $100 item. I bought it 5 years ago for $100. You have an item you bought 5 years ago for $100. They're both worth $1,000 today. If I trade my $1,000 item to you and you trade it to me, I've profited $900. So I owe income taxes on the $900 gain. You owe $900 of income taxes on, well, income taxes on $900. You don't owe the whole $900. So we both owe on a $900 gain. Further than that, if we're both end consumers, not resellers, we both owe sales taxes on the amount. And that's not Dan saying it. That is the primary source. That is the IRS rate here. So bartering and trading, each transaction is taxable to both parties. It is taxable the full market value of the services or the goods that are being traded. So say I have a Pokemon card and I have a guy and installing my furnace for me. Say that I buy the furnace, I buy the materials, and I pay him. I pay him in Pokemon cards. That is, I need to pay taxes on that gain if I realized one, and he needs to pay he needs to pay sales taxes on basically buying that from me, because that's not an item intended for resale in his business of installing HVAC units. So a little bit of a rant there, a little bit of an addition there. This was a question that came in on my last video, so I'm just including it here at the end. Childhood cards, like how do I account for the cost basis on cards that were bought a long time ago I might have lost the records for? Estimate best you can. Use the original cost basis. If you have one of these from your childhood, your cost basis doesn't have to be 0. But like if you bought it from your local game store in 1999 and if you paid like MSRP, like what was that, 110 bucks back then? $3 a pack, $2.99 a pack. Yeah, that would be like 108 bucks. That's your cost basis. So say you sell it for $10,108. Well, you sold it for $10,108. Your cost basis was 108. So instead of profiting on the full $10,108, you only profited on $10,000, right? So and it's complicated. But say you have a big collection. Some amount you got from packs, some amount your mom bought you a Charizard on eBay for Christmas. I'm never going to sell my PC anyway, so my PC stays out of it. I never sold my PC as part of getting my business going. I funded it with $5,000 of fresh cash. So that's all you can really do on that. Upcoming videos, there might be more tax topics. I thought about doing like 2 30-minute videos to separate this out, but I guess what I ended up doing, I went for it all at once. If you have any, like, I don't know, it'll probably be a little bit of a break now. I mean, I did, last Monday's video was heavy on taxes. My 3-hour live stream was all taxes, and another hour video, all taxes. So that might cover it for this year, tax time. I'll probably make a trend of doing tax type videos around tax season every year. If you have any more, hit me in the comments. I will answer every question as I did last week, as I always do. I'll do a household budget video coming up soon. I don't know if that'll be ready by next week. Maybe some other tax topic will come up for next week, but I think I covered it all in the 4.5 hours of content I've made in the past week on these topics. So as always, I very much appreciate everyone watching. If you made it to the end of this, give me a taxes rule, because they do. I'm a big fan. Anytime you can have all these numbers, have all these spreadsheets, have all this room for optimization, I'm going to be right there. I'm a big fan. So if you made it to the end of an hour-long video on taxes, a PowerPoint within Excel, you're a real one for sure. Yeah, that is everything though. I appreciate you all watching. I will catch you all later.